Hello, I'm Monica Gibson and welcome back to the DukascopyTv studio. Today I'm joined by Charles Henry Monchau. He is the Head of Investment at EFG to discuss his views on the airline industry. Charles, thank you very much for coming in today.
Good morning.
Thank you. Now, you're currently interested and invested in the airline stocks industry. This isn't very popular, however, by some investors. Could you perhaps give us some reasons for this, please?
Yeah, sure. Well, one of the reasons it is not popular with investors is that it has been very difficult to make money with airline stocks. That was something highlighted by Warren Buffett back in 1995, where he said that basically on an aggregate basis, the net returns for shareholders in airline stocks is less than zero. And he was right. If you look at the performance of the last 25 years of airline stocks, it has been very poor. We view this industry as a commodity business. If you look at the carrier earnings, they are mainly driven by economic activity and fuel prices. Over the last 15 years, fuel prices have been going up. And in terms of economic activity, we had a recession in early 2000s and then a financial crisis in 2008. And of course, this has weighed on the performance of airline companies and stocks. But earnings of carriers are not just driven by economic activity and fuel prices, they're also driven by supply or capacity, if you want. And if you look at capacity before the financial crisis of 2008, the barriers to entry to the industry were very low. Why is that? Because financing was very cheap. So this has brought a lot of competition into the industry, mainly from budget carriers or low-cost carriers, if you want, which means that at some point there was just too much capacity in the industry, but things have been changing recently.
So what are the main changes, would you say, Charles? Could you tell us perhaps some of the differences today, for example, than some years ago?
Sure. So the big difference is precisely on the supply side, so capacity. After the financial crisis in 2008, financing conditions for the airlines have become much more difficult, which means that the barriers to entry to the industry have started to go up. In the same time, we have witnessed a wave of mergers, not just in the US, but also in Europe. And this has helped to bring capacity down. And now, with capacity in check, airlines are able to increase fares. So not only is capacity in check, but we are also seeing other improvements. For instance, non-ticket revenue streams are on the rise. As a customer, you can now purchase a better seat or an access to lounge, Wi-Fi access, and so on. Two, before the focus was on market share. Now the focus is much more on profitability, which means that airlines are managing their seat inventory for profitability purposes. Three, in terms of costs, they are able to keep costs under control, especially non-fuel costs, such as labor costs. And last but not least, airlines are now able to deleverage their balance sheets. They are using cash flows to pay down debt instead of increasing capacity, and this is a big change. So the bottom line is that if you look at these charts, so you have a red line, which is a proxy for pricing power, and you have gray bars, which are basically the operating margin. You can see that both are going up. Mm-hmm. And we believe that thanks to that, we should see a re-rating of the sector. In other words, the PE of the airline stocks should go up.
So then, Charles, how would you play this theme? What are your favorite stocks at the moment, would you say?
So we believe that there are some stocks we should see upward revision to their earnings estimates. Many of them are trading at a very low valuation, very low PE. So there's a case, for instance, for Delta Airlines, which trades at a PE of 6 times next year earnings, but we also like Southwest Airlines, United Airlines. But if you want to play this sector on a broader basis, you can use an ETF. The name of the ETF is the Guggenheim ARCA Airlines ETF. The ticker is FAA, and that provides you with an exposure not only to US airlines, but also non-US airlines. Of course, there are risks to this investment thesis. For instance, if we have a sharp increase of oil prices, or if we have a sharp and sudden increase in interest rates, and also an economic recession. But all in all, because of the low valuation, that provides investors with a margin of safety. So if you're an investor with a high risk profile, we believe that's indeed a very interesting theme to be played.
Well, Charles, lots of very interesting insights that you've given us there, and I'm sure a lot of information for investors. But thank you very much for your time today.
You're welcome.
Thank you.
Thank you.
Well, that's all from Charles and myself for the moment. I'll be back with more exclusive interviews later on, so please do click back for that. Bye for now.